The TCS Bank is the first Russian online retail bank which uses an innovative approach to banking. It provides its services to clients using the high-tech developed platform without operational offices. It was established by Oleg Tinkov, Russian entrepreneur, in 2006, and since then the bank has become one of the market leaders. The TCS Bank is the third credit card issuer in Russia, situated on the 51st place among other Russian banks by total assets and on the 21st place by net income. The bank has been assessed by major rating agencies and has received B2 stable rating from Moody's and B+, also stable from Fitch. In addition, there are international investors in the shareholder structure of TCS, such as Goldman Sachs Group, Horizon Capital and Berim Vostok. The bank comprises all best applied business models like Visa, Cielo, Paragon Group and International Personal Finance, becoming a combined financial partner for a modern individual who is looking for high interest rates and convenience. Hence, TCS offers its clients a decent access to services using the internet, generally via smartphones, mobile application and computers. All issues are being solved using the call center with low waiting answering system. Also, TCS offers such services as e-wallets, prepaid cards and debit cards. TCS is the big bank employing more than 6,000 people working across Russia. It holds 7.5% of market share and due to its financial results was awarded by Bank of the Year by the magazine The Banker. Retail banking is the key business part and makes the bulk of TCS profits. According to the bank's information, the TCS acquires 58% of its clients using the internet, generally via advertising, cold calls, SMS and banners on popular sites related to finance and banks. TCS uses the multi-marketing systems, investing money, saved with approximately low fixed costs in comparison with peers, into advertising and customer acquisition, generally via online channels, direct mail and call center. The TCS key strategy points are: first, to improve insurance business and to make it more profitable. Second, to expand the attendance area. Third, to overcome the existing competitors and to improve the high-tech platform. And the fourth, to be profitable and to remain the good amount of sales. The TCS management comprises only professionals. Each of them has prior experience in finance, IT, economics or accounting. For example, TCS CEO Oliver Hughes, before entering the TCS, has worked in Visa. He had increased the company's turnover from 1 billion to 100 billion for 4 years working there. It is an impressive result. Although the company is being audited by the Masters of Audit, the company PricewaterhouseCoopers, the TCS Bank has its own audit committee, which helps the management to oversee the financial statements, financial results, and to improve the clearness of the company's statements. Besides, the TCS has its own remuneration committee, responsible for incentive distribution and securities appertained among the top management. We suppose that these arrangements could diminish the principal-agent conflict and directly involve senior management into the business processes, giving them clear and precise view on what is exactly going on in the bank, so to diminish fraud and inefficiency.
Until 2012, the growth of the credit card market volume rose and later it started to fall. The main reasons were diminishing the real GDP growth and increasing the share of non-performing loans in retail banking. The first factor influences the level of consumption in the economy, which defines the demand for loans. The second one influences the supply of loans because banks become stricter and try to decrease their approval rates. According to the macroeconomic forecast, we expect that this tendency is going to continue in the future. Since 2013, TCS holds the third place on the credit card market. According to the latest financial results, its market share is equal to 6.7%. According to the Porter's 5 forces analysis, the credit card market had the following characteristics. There are high barriers to entry. According to the law, the minimum level of registered capital has to be 300 million rubles. Besides, additional investments for development are needed. There is a high power of suppliers. Investors are very sensitive to interest rate differences. Therefore, banks should offer higher interest rates for attracting investors. Besides, if a bank wants to substitute one source of borrowing with another one, it will have to make particular expenses like IPO costs or bond listing costs. There is a high level of competitive rivalry, according to the research of the Higher School of Economics, in which Panzaros model was used. The banking industry market has a strong monopolistic competition type. There is a low availability of substitutes. In Russia, there is a very limited quantity of other way to lend money for retail customers. There is a medium power of buyers. As in the case of investors, customers chose those banks which have appropriate interest rates. That's why a bank should take into account customers' preferences for being competitive. However, it's not the only factor influencing buyers' choice. The other one is the quality of services. Therefore, customers' power is considered to be moderate.
The Russian insurance market requires huge capital to enter and remains attractive for investors despite of slight deterioration in 2014. The insurance market has all tends to grow in economic uncertainty, as uncertainty is a great driver of being insured, either for individual or for business. That's the key point why financial institutions are keeping a close eye on entering the industry. The market leaders are calmly searching their approaches to remain profitable and maintain their market share. However, the regulatory changes also influence the insurance market. During the last 3 years, the whole industry was concentrated on the acquisition cost reduction and profitability increase. Today, the objectives have changed. In the next 2 years, we forecast an even bigger market consolidation because many small companies will leave the market due to the first, worsened macro situation, second, severe expenses, third, lack of resources, and the last is increase of loss ratios. Taking everything into consideration, we can sum up that the Russian insurance market will be strongly dependent on the bank lending and overall economic shape. The other factors which are important in the non-crisis time will be collateral.
For estimating a fair value of TCS share price, the residual income model and the relative valuation method were used. According to the first approach, the equity price was equal to $11.56, and according to the second approach, $7.46. For calculating the final price, the average value was used, and it was equal to $9.51. In spite of the fact that the relative valuation method is usually less accurate, we consider both models to be equally efficient because it's quite difficult to make accurate forecasts due to the high level of uncertainty of Russian economy. We prefer the residual income model to the traditional DCF approach because it's difficult to distinguish operating and financial activity in case of financial institutions. The main assumptions of the model are the following ones. The loan portfolio growth is assumed to be slow. According to the forecast published in Bloomberg, a negative real GDP growth is expected. It means that the level of consumption is going to decrease due to decline in the standard of living. Moreover, a fall in the loan supply is expected because the number of solvent borrowers has been decreasing. There is a robust increase in the share of non-performing loans in retail banking, and according to the forecast of the unemployment rate, this tendency is going to continue in the future. The loan interest rates are supposed to be the same as they were because of a significant margin reserve. Besides, when the most of the banks rose their interest rates after increase in key interest rates, TCS did not do it. The cost of borrowing is assumed to sharply increase in the fourth quarter of 2014 and then progressively decrease. This assumption was made because of the Bloomberg forecast of the key interest rate, which influences the most of interest rates in Russian economy. The cost of risk and consequently the loan impairments are supposed to decrease because of the bank's strict underwriting policy and an effective work of the internal debt recovery firm. The growth of insurance income is assumed to be slow due to the reasons related to the loan portfolio. Losses from operations with foreign currencies are supposed to increase in the fourth quarter of 2014 and the first quarter of 2015 due to the ruble devaluation and large fluctuation of exchange rates, and then decrease in spite of the fact that the USD exchange rate is expected to be high. Its further fluctuation are not so significant to cause large losses from operations with foreign currencies. The cost of equity is supposed to be 17.32%. We used beta from the Demadoran site because TCS shares are traded approximately for a year and mostly during the crisis time. It means that if we used the regression method, we would obtain a bias estimate of beta. We used the market risk premium from the Demadoran site too, and it consisted from the matcha market risk premium and the country risk premium. The risk-free rate was the 10-year yield of the US government bonds. It's quite difficult to find appropriate analogs for TCS because in Russia there are no retail banks which are listed on a stock exchange. Instead, we use the 7 retail financial institutions which are listed on the London Stock Exchange. We assume that all the differences like macroeconomic conditions, regulatory rules, and individual features influence the factors which fundamentally define a share price, namely expected income growth, return on equity, payout ratio, and cost of equity. Therefore, we estimated the two regressions. Statistically, we consider both models to be equally efficient. That's why the final price was the average value.
The deterioration of Russian operating environment seems unavoidable for every bank, including TCS. Nevertheless, TCS remains profitable, showing total comprehensive income of 150.7 million for 2013, and almost a half of that, 69.9 million for the third quarter 2014. The bank follows all regulatory standards, having a duty to maintain a statutory capital adequacy ratio and 19.5, well above the required 13. The group keeps all main capital ratios and overcomes them, increasing the bank's stability. Tier 1 capital ratio is 21.17 respectively to 19.85 in the end of 2013. The group shows stable growth in incomes in year-over-year period. For an example, the group has shown 393.5 million first half 2013 and 422.1 million first half 2014. In the third quarter, TCS has shown good net interest margin, increasing it by 2.4% quarter-over-quarter, second quarter 2014. This could be described by efficient risk management, an increase in net interest income, 23.1 billion in rubles, 9 months 2014 to 19.3 billion year-over-year period. In the comparison with peers, the TCS has best ratios. Since the beginning of the year, TCS gross loans reached 93.7 billion rubles. The loan loss provisions in the first quarter has increased and in the next 2 quarters the loss provision levels are decreasing. Management is working on amount of NPLs and provision, thus improves cost of risk ratio.
In our opinion, TCS incur the 4 significant risks, namely liquidity risk, credit risk, country risk, and foreign exchange risk. In 2015, TCS will have to redeem a large amount of their debt due to a low level of investing activity, a high cost of borrowing, and the country recession. Refinancing is quite difficult, and for TCS it can be problematic to redeem their debt. Due to the ruble devaluation, there are large fluctuations in currency exchange rates. According to economists' opinion, political decisions have a significant impact on exchange rates. Taking into consideration the fact that Russia and the Western countries are still not friendly-minded, exchange rate fluctuation can continue in the future. In spite of the fact that TCS has this strict underwriting policy, there is a risk that borrowers which were solvent earlier can become insolvent. The arguments are expected increase in the unemployment rate and decrease in real income due to the inflation. As we mentioned before, the recession of economy is expected. Therefore, TCS incur risks of revenues declining, deposits outflow, and decreasing the quality of loan portfolio. Despite the risky macroeconomic conditions, we have a buy recommendation. Firstly, there is a 200% upside potential according to our estimation. Secondly, the key efficiency ratios like return on equity, return on assets, and net interest margin are higher than peers' median and maximum values. Finally, there is a good company management. Analyzing the data of a company, it's possible to mention that it effectively reacts on changes in macroeconomic conditions, decreasing cost of risk, optimizing operational costs, and recovering the previous level of profitability.